What's up, everyone? Here we are with a nice breakdown of some trades that I've taken lately. So let's get started with this breakdown. I believe that this could be extremely helpful for many of you. I'm combining my trades with the footprint chart, but right now I will not do a breakdown of the footprint. I will release a video very soon explaining how the footprint works and also some insights about how the whole software works. And that's it. And then if you want to learn more about the footprint, make sure to join the waiting list. I will release 40 spots in order to get access to this information during this year. That will be the only time that I open during this year. So yes, now let me open the footprint, which I was mentioning. Here we are. So when I talk about footprint, I just mean, for example, if I'm on Eurusd, we were trading Eurusd on TradingView, I would also like to check out how, wait, let me go to my settings, templates. Here we are. Perfect. So what I mean is that once we are on the TradingView chart and we're trying to see whether we want to enter or not, then I just need extra confirmation to actually see the orders that are coming in the footprint. In the footprint, you can literally see the orders that are hitting the market, if there are volume imbalances, if there is, if the buyers or the sellers are in control, no matter of if the candle is actually a bullish candle or bearish candle. In a bullish candle, the sellers could be in control. So with that being said, this is just a quick introduction. Stay ready for more videos about the footprint dropping soon. And of course, if you actually want to learn more about it, then join the waiting list. Perfect. Getting started with Euro USD. Yesterday, I was looking for sells above this liquidity. So I marked out the liquidity. It was pretty clear liquidity, I would say, clear liquidity level. Easy to spot. Easy to spot according to smart Excel concepts. We start the day right here. We start the day. Asian range starts. We start trending to the upside. The only thing that we want to see is previous day high being swept, confirmation to continue to the downside. Now, what happened instead, and this is why we need to stay ready to actually adapt our bias and adapt our trading plan, is that I went on lower time frames, of course, once we pushed above that area right here. Okay. Let me go to the kill zones as well. Perfect. So we pushed above this area and we retraced to the breaking point of this area outside of the main sessions that we want to trade on. So what happened is that I was thinking and I was looking at the chart, and I know, and this is why this is marked right here, that the confirmation to actually enter sells will be below this area. So if we get a nice push below this area and a retracement to continue to the downside, we can enter. Now, the reason why that didn't happen is because, let's just look at the chart together. We start pushing to the upside. It's a extremely strong push. And if you know, and if you actually go back and watch the videos, especially of smart Excel concepts, once we grab liquidity, we want to see confirmation right away to continue. Now, this doesn't happen, but there's still a chance that after a huge liquidity push to the upside, after grabbing the liquidity that we had on the left, we can still push to the downside and give this confirmation. This was my confirmation level, okay? Now, what happens is that we start retracing, we start creating structure, and you know that I like seeing structure. So here there is no structure to the downside. Here we start creating structure. And after creating this structure, we get a confirmation to the upside. This confirmation to the upside made me change my bias, not just because of the confirmation, but because everything was aligning. This was too big of a confirmation. So the push to the upside was too big in order to retrace all the way to the downside, get to this level, have a confirmation, and possibly get in for sells. First thing first, confirmation was too big. Second thing, which is extremely important, the push to the upside was with high volumes. Now, we might know that in general, when we have a liquidity grab, there can be high volumes, but this one was different. We just went straight to the upside. It's not a couple candles with nice volumes. Like, for example, it's not just this candle right here and then retracing and getting a confirmation, but it's a whole push to the upside, going way above our confirmation level. And if you know how I trade and how you should trade as well, we don't want big confirmations in order to trade. We prefer small confirmations. By small confirmations, I mean that we have a liquidity grab right away, we get the confirmation and we enter. We want confirmation right away after the grab of liquidity. So what happens is that we start retracing, and as we start retracing, we start creating structure which is confirmed by a bullish scenario. At this point, I understood that I wanted to enter buys and that I was going to target this high. Multiple reasons why I switched from sells to buys. First of all, high liquidity push to the upside, confirmation becomes too big. Second reason after that is that there is no confirmation right away. It's too late to look for a confirmation. Even if we come all the way down here, it doesn't look good. Third confirmation is just, a lot of studying and a lot of time on charts in order to get comfortable and seeing the same setups over and over. I knew that this setup, I've seen it already. I knew what was going to happen. If I was wrong, I was good with being wrong. But why did I actually enter? Is because I don't just think, oh yeah, we're going to go for buys and therefore I just enter at demand. No, that's not what we do. We don't guess. So I looked for confirmation. Once confirmation happened, I just entered 0.5, okay? 0.5 entry, right? 0.5 entry to the upside. Also, volume confirmation on the footprint. And that was actually, I will have to admit that the footprint confirmation, I'm not covering it right now, but it was really helpful actually envisioning and seeing the orders coming in the market in these two candles down here. After these two candles took place and I looked at the footprint and what was happening in the footprint and which type of orders were coming in the market at this level, it was just an extra confirmation for me to really take buys and target this external liquidity. And if you have seen my stories or also my videos in the free Telegram chat, I just sent, as we were right here, I believe, I was just telling everyone that we were going to go for these highs. This was the next liquidity that needed to be grabbed in order for the market to be efficient. Now, after that, this is not a trade that I took. I just marked it out and it didn't get, I didn't enter it. I just didn't enter it and it went to the downside and it could have been a very nice trade. I didn't take it, okay? Now, why did I mark it out? Why was it nice? And to be honest, I didn't take it just because it happened too quickly. We are on the 1 minute time frame. And if you know, which is the way that we reason. So let's go back for a minute. Here we have fake change of character. Break to the upside, break to the downside, continuation to the upside, fake change of character, okay? Here we have a possible confirmation that doesn't give confirmation. A lot of people are looking for sells, doesn't give confirmation, gives a buys confirmation, a bullish confirmation to target external liquidity. The whole day, let's go back, and if you don't know this concept, you must go back and look at our courses. How is the daily candle being formed? All right. If you know, every candle has a body, a wick to the downside, and a wick to the upside. Okay. Always. How is the daily candle being formed? Here we have the daily open around here at 5. Let me see. Perfect. Around here, we have the daily open. This is where the daily candle opens. Then we create the wick to the downside and we start trending to the upside, okay? Now, which is the reasoning that allows us to possibly catch these sells? It's a matter of confluences. I know that it might sound complicated, but as you study confluences, all the things will come natural. To me, it's very easy to say, okay, this thing and this and this and this happened, therefore I am confident taking sells or buys. For you, you just need practice. Is not, it might sound difficult. It was sounding difficult for me when I needed to look for all of these confirmations, all of these different factors that were playing a very important role in my trading strategy. But after you have it clear of what you need to look for, and after you just keep putting in the work every single day, it will come natural. So daily candle, we go to the downside, we create the downside wick, we start going to the upside. So we're creating the body of the candle. We need to create the upside wick some time during this day. So the London session is already over. We started the New York session, and it's not the beginning of the New York session, it's towards the end of the New York session, because in the beginning of the New York session, we got a buys continuation. So we're just going higher and higher, and just looking at the daily bias, the daily candle, how a daily candle is formed, and also of all the fake confirmation that happened during this day. First fake confirmation, second confirmation that actually reversed and gave a buy confirmation to continue to the upside. The third confirmation was going to be valid for me. And you know this, if you are especially in smart Excel concepts, you know that the third confirmation can be extremely interesting if we have the confluences that are necessary. Also here, we had some very nice footprint chart sell orders coming in the market. We just, when you can see what is happening inside the candle so clearly, with all the orders coming in and all the orders being filled and all the buy orders or sell orders coming in the market, everything becomes more clear. Because of course, if I see that we are having a upside momentum, but in this upside momentum, there are way more sell orders than buy orders, we are probably closer to the end of this bullish scenario. And also what? Also, if we have this push to the downside, which is our confirmation, with a lot of sell orders in the footprint chart coming in the market, then it's even a better confirmation. So what happens right here is that I was looking for confirmation. This was going to be my confirmation. Here with this wick, I hope that you can see it. With this wick right here, we create the confirmation. And then when we start pulling back up, and here it would have been our entry. I wasn't able to get in. It happened too quickly. And also I was done for the day because I already took this trade, but I marked it out, and stop loss, of course, is above this area. This is my strong high, stop protected stop loss. Take profit was at least to this liquidity grab. Now, if you just zoom out and look at how much we could have rode this trend, of course, could have been a huge trade, but you need to be realistic with your targets and with your trading plan. So this would have been my trade, 1 to 3.